This is the S&P 500 tracking ETF, the SPY, for those of you that don't know. And basically what we have here is pretty major. Now, why is it major? Let's take a quick look here. So essentially what has happened is we had a head and shoulders pattern here. It was untriggered until yesterday. Now, what triggers a head and shoulder pattern? Basically, this is what's called the neckline, all right? So this is the neck, right? It makes sense. And when this breaks, that's when it triggers. It only triggers when this breaks. Now, this is important because I've seen so many people saying, oh, look, it's a head and shoulders, go short when price is up here. That's not the key. The key is not to do that because for all you know, it's going to go like this. All right, it's when it triggers. And the beautiful thing about when it triggers is that you actually get an opportunity to keep your stop very small. How does a head and shoulder pattern fail? Simply closes back above that line and it fails. The beautiful thing about that, and by the way, every trade you go into, it could be a losing trade. There is no trader that is 100%. Always remember that. Every trade you could be in could be a loser. So you need to know your exit strategy. And basically, any close back above that line, you exit for a small loss. Okay, I gave it a shot. No problem at all. Now, in the scheme of things, this pattern to me is a big deal. Because again, a head and shoulders pattern, you can actually calculate your target. Now, I'm going to show you how to calculate this. And by the way, folks, this is available of one of about 1 million things in my Winning Trader series. And again, that's at verifiedinvesting.com. 20 hours of everything that's up here, guys. Everything that I've known and I've learned for the last 24 years of technical trading, psychological trading, it is all in there. All right, so what you do is you take the highest point of the head, you drop a plumb line right down to the neckline. That distance, if this head and shoulders plays out to target, that is your distance that it should move. You take this length and you mirror it from here, from the break point, straight down. Now again, if you do that, you get approximately 410 to 405 on the SPY. Considering we're right here at 431, that's a pretty significant drop to the downside. All right, now, by the way, that doesn't mean it's going to go straight there. I find oftentimes when people are hearing me talk, they think, oh, Gareth says it's going to go right to that level. No. In fact, yesterday, I was nibbling on some long positions. I mean, again, I'm a trader, but I was nibbling on some long positions because things were coming into technical levels. I will show you some of those charts later in just a little bit. But suffice it to say, this is a very negative thing for the S&P 500. Not only do we have a scenario where we have lower highs, right? Lower highs, but now you can absolutely say low and lower low has been made. That is a change of trend. And important to understand because that does play a lot into the metrics of where the market will likely go.